Ladies and gentlemen of the crypto space, we're live on a Friday, March 17th at 11:23 a.m. I'm going to cut it short at 12 today. I'm going to do my best on time constraints, but there's obviously interesting things we could talk about. This is the first stream since Monday. Monday, we got a glimpse Sunday night of what the heck was going to play out. Uh, Obviously, everyone expected contagion. And that didn't play out. Why? Because the volatility was suppressed. It was suppressed by loans, more debt. Everything reduces to M0. It reduces the amount of actual currency units that exist. So everything above that is, someone lent to someone who lent to someone, a rehypothecation, which is an inflated state, and everything wants to contract, collapse to the base state. And they interrupted that process because it would have been contagion. So my take on where we are is they will not intervene, period. They will not jeopardize the relative inflated state of the system, which can be basically visualized by M2 compared to M0. I don't know whether they're actually afraid of the U.S. liquidity situation or the rest of the world. The rest of the world is multiple times larger than whatever the hell is going on in the U.S. What, a tenfold order of magnitude? So that is just wild to even contemplate that intervention is the name of the game. It's a perverted reality. But the point of, at least what I put on Twitter for the title of the stream, not the title of the stream on YouTube, is volatility suppression, which is exactly what we see here. But what I put on Twitter was, here, let's show you. There's binary choices. The reality of everything in my mind reduces to binary choices. The reductionist viewpoint. I have no time for bullshit narratives. Oh, they intervene and it should collapse, and the natural state of everything is to collapse, therefore it will collapse no matter what they do. They won't be able to stop it at some point. And I'm not fond of that narrative because you're talking about human beings. You're talking about people that will protect the status quo for their own interests, as well as their organization's interest, as well as the intent and spoken implied intent of government, which is, from a reductionist standpoint, one, the main maintenance of civility. I mean, Yellen was in Congress, and she said that if it would lead to systemic crisis, that's why it was done. Then, as a result of everything I've seen, anything will lead to systemic crisis at this point, because that's the inflated state of the system. So, where are we? Max Keynesian economics. They will manage the shit out of the currency. And obviously, where does this lead? And you got the whole narrative of the CBDCs, but that is, you don't just go from A to Z. The amount of volatility in that sequence of events is extraordinary. So we are here. The next couple of steps are opaque. We could speculate what they will be, but they're irrelevant from a reductionist viewpoint. From a reductionist viewpoint, they will intervene rather than not intervene. They will suppress volatility wherever it is rather than not. There is no holding back from what they've done and what they will continue to do. This chart is absolutely extraordinary. The last time volatility in the bond market blew out like this, it was 2008. And back then, it took several years. It took a couple of months to suppress the volatility, but it took several years for the economy to start to expand again, to inflate again. It took a couple of months, 3 months in 2020 for them to get volatility under control. Let me tell you right now, it took them a weekend. This past Saturday and Sunday, it took them a weekend to crush volatility. There is no intervention that they will not do. And that's not from at some point they're not going to be able to do something. No, every single opportunity they have to intervene into systemic crisis, they will do it, and they will do it faster and faster to the point where it'll be real time. They will fix it on Friday instead of waiting to Saturday and Sunday. It's not like they waited until Saturday and Sunday. It was a complex situation, and they needed to figure out the facility that would have provided the support that they needed to crush the volatility. But they now have the experience of doing it over a weekend. So now it's going to be done in a day, and the next time it'll be done the same day. To maintain the status quo, to maintain civility. BTFP is their latest acronym, and it basically turns the entire U.S. banking system into a Eurodollar bank, where collateral is just, it's not the mark-to-market that matters, it's the face value, which basically reduces to the government being able to loan, but that means they have control over the collateral because they're able to intake it and exchange it for dollars or a loan. So that's a complexity and how it relates to the total liquidity composition of the banking system. But the whole necessity of government into literally just the next year is to manage the treasury market. Yellen screams about this all the time, and that's why we're staring at this chart right here and why they did what they did over a weekend, because their biggest fear is losing control over bonds. You lose control over bonds, you lose control over money. The whole system of the world is dependent on the risk-free nature of bonds, which is exactly, as much as we look to the Fed and their story and their narratives, Yellen is an open book, and you can read right through it. They're afraid of liquidity. She has said it time and time again. Liquidity conditions. That is what they will respond to always. Inflation. Inflation was transitory. Then it wasn't. They don't have control over it. But they could easily control. They can't control inflation because that involves the general public. And that involves behavior, and that involves emotions. So you can't just, airdrop money. We clearly see the implications of that, because the general public's going to do what they're going to do, and they don't know how to manage the money. But they can control the bonds by buying and selling, and that's exactly what Japan finds itself in. So they can affect that price point of the bonds across the curve, and they do that by open market operations. This leads down the path, step Z, of what everyone sees with regard to a fully controlled collateral and currency system. This is why we've heard of the CBDCs like we have. But again, that's step Z. So where are we? They will try to control the volatility using every means possible anytime there's a volatility event. Now, as much as they say the stock market is in their interest, everything they do influences the stock market, and I think the stock market is forward-looking and peers through all this bullshit. In aggregate, on the margins, you get your tiny little VIX spikes nowadays, 19, 20, 21. But overall, it's suppressed. It's suppressed because the bond market volatility is suppressed. The causality is bond market volatility leads to currency market volatility, leads to risk market volatility. That's the reductionist viewpoint going forward. In the short term, volatility is going to be suppressed at every sighting. It has to be, otherwise the system fails. You got incivility. You got neighbors cutting off neighbors' hands to eat an egg sandwich for lunch. And that's scary. So, there's two things that I do. I try and understand conditions, and that gives me peace of mind such that I'm not really unprepared or like, what the fuck just happened? I don't really have that occur for me anymore. And then there's positioning relative to my understanding of conditions. And as we said, I'm a reductionist, and I reduce things to basically binary choices: do or don't do, is or isn't, left or right, up or down, team A, team B, so on and so forth. So what can be done now, today, for you, for me, to best position ourselves going forward? And frankly, I've said it a couple of times, there's pretty much nothing to do. The optimal thing is relative to you, how you engage with the market. Now, there's plenty of people that are true capitalists and PvP, and they extract money from other people and vis-a-vis capital gains. I don't subscribe to that currently, so I'm a value investor. There's plenty of value investors that are small scale that still attack traditional equities markets, dividend investors. But from a crypto market perspective, there's great opportunity because of the volatility. What do we know with regard to value? You want to buy it as cheap as possible. So if you see an opportunity for something that you speculate will survive rather than will not survive, and it is available at a discounted price, those are the binary bets that I want to take over a 5 to 10 year time horizon. I want to have 3, 4, 5, 6 things that I speculate will continue to exist in 5 to 10 years, will continue to be productive from a cash flow positive perspective, and I want to get them as cheap as possible. And that's it. I don't make it complicated. That's as simple. That's the entire process, the entire procedure. If a discount is available, you make a purchase. If a discount isn't available, you don't make a purchase. So we have the 5 or 6 picks, don't we? Do we not at this point? Isn't it pretty clear, everything we've been discussing for years? I mean, it's pretty obvious. I'm not going to rehash the names. I don't like, even on the stream nowadays, to call out specific projects. I want people to understand it's not about a specific protocol. It's about the process. It's about understanding conditions and having a process that you just execute. If you see a new protocol that's potentially cash flow positive, hopefully in the short term it is cash flow positive, that's not necessarily a good start for a protocol, and you want to take a speculation that it exists in 5 to 10 years and the cash flow through the enterprise will grow over time, there's rationality there, and that makes sense. And now you do the calculation, position sizing relative to other enterprise that's more established, that has more likelihood to exist, because the longer something exists, the longer it will likely exist, and that's the lindiness effect. So, logically, you want to allocate less capital to the more risky, more volatile, newer protocol that is not time-tested, mother-approved, which is very contrarian. Is that weird that that's very contrarian? Very inconsistent with the 2020 concept of aping. Act first, think later. Think. Take your time. Pull back. Relax. The odds are there's nothing to do. The odds are you get to sit back, watch me yell at Twitter about current market conditions, and take very calculated actions in the market. So there's your binary reductionist viewpoint. BTFP is interesting, and it's going to change everything going forward. And as I said, this is all about a capacity to control volatility, and now they have one heck of a program to control volatility. Clearly, it's in its initial stages. We'll see how it plays out, but the odds are once the government offers something, they don't take it back. The odds are once the volatility gets more extreme, the program will be expanded, it will be backstopped, and it will probably never be recalled. So it will continue to operate and just become a part of normal operating procedure. This gives the government a capacity to buy the bonds. Why? Now this gives the banks the capacity to just buy whatever the fuck they want, and it doesn't matter mark to market. They just have access to the face value cash, the face value of the bond. That's literally just given to it by the central bank. This is a structure. The system has now been structured such that the U.S. government can buy its own debt vis-a-vis its commercial banking system, can print, buy, and monetize its own capital. Clearly, this all from a 5, 10, 15, 20, 30-year perspective is maximally perverted and self-destructive. History rhymes; it doesn't repeat. So this is where Luke talks about, Burns versus recently von Havenstein. So which historical downfall of a government's currency will the United States follow? Now, the luxuries of the reserve status have allowed the can to be kicked for what seems to be decades, and I suspect that is a time frame that will persist 5, 10, 15, 20, 30 years. And obviously the complexity of its military might further entrenches that reality. So aside from heading down the geopolitical conversation of where this will head with regard to conflict, I prefer the way we started and had the middle of the stream with regard to our reductionist viewpoint. Understanding conditions and what actions can we take and what actions shouldn't we take. And that gives me peace of mind. I find it very fascinating to listen and digest geopolitics and contemplate, mid to long term what the hell is going to play out with the financial systems. But I find it very soothing. I find it almost therapeutic to look at charts like this and take a peek at volatility on the monthly for the euro. And I love this chart. Look at this chart. This is my whole life. I was born in 1983. This is from 1981. This is the dollar for my whole life. I was zero. I was -2 when this chart starts. So I find it very therapeutic to look at data like this, and this gives me a perspective on current conditions. And, the further out you go, the further you project current conditions into the future, the more uncertainty you have, which leads to anxiety. Everyone's worried about the future. I'm concerned about the future. So just reminding you what I just said, I find comfort in understanding current conditions and reducing the choices that I could take to binary options. Do this or don't do that. Is this good? Is this bad? Is this likely to continue to exist, or is it not likely to continue to exist? Do I want to take that bet, or do I not want to take that bet? Am I over-positioned or under-positioned? Is it a discount, or is it expensive? Am I over-diversified, or am I over-concentrated? Binary. Black and white. I'm not fond of gray areas. I recognize that they exist, especially geopolitically. But I'm fond of reducing my life and the choices I could take to black and white, and that makes things simple. It obviously leaves out a fair amount of information, but I find that as a human, I think most of us could relate as a human. There's a great benefit that comes along with simplifying things, and that the capacity to simplify things and how it reduces our anxiety, or can and should be a goal, that's profound. And that's taken me a long time to get to this position where I can watch literally shit do what it's going to do. I'm like, what am I going to do? I can't do anything about it if shit's blowing up. So understand the blow up, understand what the hell is playing out. Can you take an action? If not, all right, I'm going to go to Subway and get a sandwich. If I can take an action, I do take an action. But acting irrationally and doing shit without really knowing what you're doing, you might as well do nothing at all until you have a clear vision of a choice to be made. Yes or no, buy and sell, but not frantically, not watching intraday hours. I mean, look at that. You're at 27 and change. That's cool. But look, I'm looking at one candle for the whole month. Folks are running around looking at the hourly candle. If it falls below the TWAP, they're like, oh, I got to sell it. Oh, I got to buy it. It's breaking out. It's breaking out. Look at that candle on the hourly. Fucking drive yourself nuts. Gonna drive yourself mad. Do you have Bitcoin? Cool. I have a little bit. Do you have Ethereum? Cool. I have a bunch of that. What about Friday? Do you have any assets that you could put on a debit card and spend on a Friday? I'm pretty sure that's important. Do you have dollar bills, paper dollar bills, so that if the electricity isn't working or debit cards aren't working, you could convince someone at a convenience store to give you some shit off a shelf without them trying to hit you as you're walking out the door? Okay, so paper money's pretty useful. So this is my binary reality that I think about. Isn't that a bit awkward? If you cover all your bases, that puts you in a good position. Not quite sure where gold coins fit into the equation. In my mind, the way I think about things, the value of it. If the debit cards aren't working and you want to go to a convenience store and there's pretty much, civil unrest, and you want to walk out of the store with the employees saying, all right, here, you compensated for us allowing you to take these items. What is more likely to convince the employee to allow you to walk out of the store, comfortably, like, all right, bye, guys, even though there's people freaking out all over the place because the damn debit cards aren't working and the ATMs aren't working? Is it paper dollars or a gold coin that is more likely to allow that to occur? People could be freaking out about the value of the dollar. I don't know. So, but that's the whole point. I'm more inclined right now, with current conditions, to think paper bills will more likely allow that to occur. But then again, how do you hedge? What if that isn't the case? You probably want to have some gold and silver coins, because if you see a gold coin and everyone's saying, oh, those dollar bills, I don't want them anymore, they'll probably let you walk out with like 5 boxes of oatmeal, and if there's any eggs on the shelf, you're giving them a couple of silver coins, 2 silver coins, 3 silver coins. It'll convince them. And if they're in doubt, you throw in a 4th silver coin. So that's what I think about. I'm not really thinking about the value of the coin. Obviously, if everything persists as expected and the system somehow maintains normal function, yeah, fine. A 10x, 100x, 1000x on gold and silver coins, great. But I don't really think of them as an investment. I only think of things that produce money on Friday as an investment. Isn't that an interesting take? That's the way my mind thinks. I think of literally, can I use my gold coin or silver coin to convince someone at a supermarket to let me take food out of the store in case of social incivility occurring? I don't think of it as an investment. Like if gold is worth 100x more, I'm much more interested in enterprise and owning a business. Because if the system is going to persist, the enterprise is going to be much more productive into the future. And I find that much more interesting from an investment standpoint. Enterprise, I believe, is the best investment, rather than monies, varying forms of money, obviously varying forms of fiat currency, and even Bitcoin and Ethereum, or gold and silver and precious metals. Because I'm not fond of appreciation. I'm not fond of the concept of something going up in value and someone trying to give me more money for the something that was perceived to go up in value. What I want is a business that pays me on a Friday. That's hot. Isn't that hot? Come on, that's crazy. So I look at things very different than most people. Era's in the house. Pleasure. Hope you're well. Hope you're well. Eduardo's suppressing volatility is creating a springboard. Well, it's creating resonance. They're going to more likely than less have to deal with significant failure, which is not just illiquidity but insolvency, where the balance sheet of an enterprise, commercial bank or whatever, a big hedge fund or an institution, whatever, it doesn't balance anymore, and that basically is bankruptcy conditions, and that cascades because that enterprise that has a balance sheet that no longer balances probably owes money, and then that cascades, it cascades, it cascades. So that's exactly why they did what they did with the bank, and it was not a bailout. It just it freed up liquidity, and the Fed obviously lent 300 billion currency units for face value of depreciated assets on the bank's balance sheet that were never marked to market. So those losses were never realized. What a ridiculous situation. It doesn't fill the void. It doesn't get, to my understanding, those depreciated U.S. bonds off the bank's balance sheet. It's just lending it, and it's a swap. So it doesn't fix anything. It just further kicks the can, and the government's getting a heck of an interest rate. Lighthouse, a pleasure. Tony, too much DGB. I'm nervous about stables right now. USDC is locked up. I can't do anything, including staking. Well, I transferred USDC to Juno, and I was able to put it on the debit card. So I mean, it works. So I don't. USDC is not really, it doesn't do anything. It's a fiat off ramp. Uh, LPing, unless you have like a couple mil, if you could get like 10%, 15%, which you can, and there's plenty of places to get 15, 20, 30% on stables, I'm fine. At 30% on $1 million, you're doing pretty good. You get 300 grand a year. At 30% on 100 grand, you get 30 grand a year. That could make a very big difference to many people. So you obviously have to take portfolio structure and size into consideration. But stables, I'm not fond of putting them to work. A lot of folks talk about that, putting stables to work. I hold stable coins as I would hold money in a bank account. I can spend it, and I do. I move my stable to a debit card, one of the couple of options we have to choose from, be it Juno or BitPay or what have you, and I spend it. I put $500 on the card yesterday, and I'm like, all right, I'm going to go to the store. I'm gonna spend the money. Now my bank account, my USDC went down, and now I gotta wait for more money, and the money comes in every week, every couple of days, really, and that now I have more stables, and I can spend those stables. Own the enterprise, balance the books. If your enterprise produces $500 a week and you have $500 of USDC more a week and you put $250 on a debit card, great. Now you have $250 in savings and a debit card with $250 worth of value that you could spend, and balance the books. Always balance the books. And then traditional dividend investor mentality would say, all right, now I got to buy more enterprise that produces more cash flow to get more dividends, to get more stables, so that now I could save 300 and put $300 on the debit card instead of 250 and 250, and then I want to get to 1,000 at the end of the week and 1,000 on the debit card. So that's the way the dividend investor mentality, traditional dividend investor would think. And that's cool. Just balance the books. That's the most important thing. Balance the books. Rupert, a pleasure. Tony, Noah, if crypto market drops 30% or more, what do you buy? 30% or more? Well, not much. I'm very content with my current portfolio. There's not much I would do. Maybe not much. I don't really want more BTC. I mean, maybe if it's a significant, I would need a significant discount. Even Ethereum, I have what I want. I have what I have, and I don't think I want much more unless it was a significant discount. So I'm quite content with the quantity that I have, and it's just going to do what it's going to do. Um, I'm not really thinking about buying anything. And obviously, I don't think of the assets that I get on a weekly basis as income as a sale. So I denominate it all in dollars because that is the denomination of choice for egg sandwiches at the convenience store, at the supermarket. How much does eggs cost? They want dollars. So when I get income from my enterprise, that's dollars. How many dollars do I get per week? And those dollars I use USDC as a vehicle for storing those dollars. And I've contemplated and I think about liquidity. That's a big deal. It's immutable. And I like the way Chris Black digests the risks associated with various stable coins. But look, the government just bailed out Circle. Come on. And now, look at the opportunity for Circle. They have like 40 billion. There's 130 billion dollars worth of stable coins in the DeFi markets. Look at the opportunity for an enterprise to facilitate stablecoin to US dollar debit card payments. $130 billion transaction fees? But it's not just 130 billion like all of it gets spent on a debit card. It's a churn. It's a system. So what has been shown is that capital churns, people they're being productive with it, and returns and capital is flowing, returns are being made, capital is being spent. That means capital wants to be taken out of the system and spent in the real world, and that's cool. This is all emerging market capital flows, at least from a traditional modeling standpoint. Look at all that capital flow that can be captured into and out of this emerging market, and imagine the transaction fees. I mean, you get a fraction, you're getting the piece of the pie on that kind of capital flow. I mean, $130 billion is the size of small countries. So that's pretty cool. So Tony, at this position, I'm probably not interested in doing much. A lot of folks are staring at this chart and like, what if it gets rejected? What is there a new low? Is it going to $8,000? Maybe I'll buy a little something at 8 grand, and the whole world is on fire. I mean, frankly, the whole world is on fire if this thing goes to 800 grand. The world's on fire either way. So that's why my base case is probably not to do anything. We've been in this game for so long. Don't we have shit? Do you really want more? Do you need more? But just don't sit around thinking about what am I going to buy today? What am I going to sell today? Because it's not sustainable. And frankly, it's something I've been working on for a long time. It's not healthy. Understand conditions. If you see a discount, you can acquire something. But what's the most meaningful thing to acquire? If you buy a Bitcoin or Ethereum, you're talking about what folks are trying to digest as like a money or an alternative money. So you could blow your mind thinking about the dollar price point of it and considering the volatility, which is why I focus on the enterprise. You sell your Bitcoin, you don't have any Bitcoin anymore. You sell your Ethereum, you don't have any Ethereum anymore. And when I say sell, I mean spend on fucking egg sandwiches. That's why I told my wife when we talked on that one stream, the most important thing is to understand how to spend this money. Because if you don't know how to spend this money, what's the point? The whole point of this is to spend it. And to figure out how to make it so you can spend it. So that's why the enterprise is so much more meaningful. You're not selling the enterprise, so it's a different calculation. If you're making X dollars per week, right now, this week, and the speculation is in 5 years' time you're going to make 10X dollars per week, that's fucking cool. You didn't have to sell the enterprise to make that more money. The enterprise is growing. The capital is flowing, the enterprise is expanding, interest is increasing, consumption is increasing, and you don't have to do anything. The enterprise is just doing what it's doing, producing money on Friday, which you could spend on a debit card to access consumer staples. Yay! Hope that helps. Matt, hey yo! Slendo, Curve, kid tested, mother approved. Well, your volatile is all hell, but is it productive? I don't know. 1.5 mil last week. Roll the calculation. $1.5 million was produced in transaction-free revenue last week. How much did you get paid if you're a VE curve holder? It's a whole different calculation if you're a CVX, CRV, or whatever. VLCVX. It's not so easy to really get a sense of what the hell the base layer is doing at that level. But if you're a VE CRV holder and you had $1.5 million worth of protocol transaction fee revenue last week, how much did you get? What happens when it's $10 million a week or $100 million a week in revenue? 10x or 100x your weekly revenue that you just made. Not considering dilution, of course, but the max dilution you're really going to encounter is maybe 50, 60%. So if the protocol transaction fee revenue goes 10x and you're diluted 20%, 30% in 5-year time, that means that your paycheck went up significantly over 5 years. That's a heck of a raise. That's pretty cool. So that's the way my mind thinks, multiples of weekly revenue. I'm going to wrap it up in a couple minutes. I got to get on a Discord stream. Kazin, hope everyone stays sound and reasonable. Once the tide flows out, you can still pick your favorite boat. No need to panic. Yeah, well, chilling. Matt, no leprechauns or pot of gold today? No. Everyone's looking for, I guess a lot of people are looking for some like magic solution. Crypto's no solution for well, it does offer some solutions, but it's no magic solution. This is just a continuation of some of the complex things that humans have historically created, just done a little bit better, maybe a little bit more fairer. Hopefully, the whole concept of decentralization and immutability, expands into the future. Hopefully, this is no magic, awesome, incredible solution. Has there been opportunity? Will there be opportunity? Sure. Clearly, there's risks. But my sentiment is, if a protocol that I own now will exist in 5 years, it's going to be doing significantly more transaction fee volume, more cash flow. So if I own 5 or 6 protocols now that are doing X amount of revenue per week, the odds are greater than 0 of those protocols will do much more revenue in 5, 10 years' time. The odds are all of them will not go bankrupt, especially if they're fucking immutable and the software cannot be modified, because that way the software will be working in 5 years' time. It's immutable. Then the question becomes, is the narrative invalidated? So this is the calculation and odds. And all we have is odds. I'll post it on Twitter, Klaus. Tony, too much. It's been a long ride, Tony. It's a pleasure. It's been a pleasure, and we'll keep doing this. Adam, hope you're well, Cap. What's the Discord stream? I'll pop it on Twitter. Thank you all. Let's wrap it up for today. Friday, March 17th, 12:02 p.m. As always, tell everyone to subscribe. I'm sure next week will be just as eventful. I wish everyone a good weekend. And you know the deal. After party on Discord for the most rational community in the entire crypto space. Y'all have a good one now. Peace.